there's a lot of structurally things wrong that have been done for decades and from both sides of the aisle. And as much as I think Trump and some people who are behind him have pretty well average good intentions to try to fix these things.
Did you know that silver is predicted to outshine gold and surge to record highs in the next few years? That's right, financial expert Peter Grandich is sounding the alarm on a massive silver price explosion, and what he reveals could change the way you think about investing. Stay with me as we uncover why silver might just be the most exciting investment opportunity of this decade.
Sure. So my top five were and still are, although one is less than, and I'll share that in a moment, was the number one still remains the debt. We just crossed. It's still hard for me to say that we have $36 trillion in debt. When I started in the business, we never even used the word trillion. We didn't even know what a trillion really amounted to. But the second still remains the retirement and aging crisis. The third was the immigration invasion, and I think Trump will do a lot to stymie that. I don't think it should get worse during his time, and there could be somewhat of a reversal on that. But there's still a huge cost associated with it. The fourth still is the BRIC. This is just the quiet period now. They accomplished a lot what they wanted for 2024, and by spring we'll start to hear what they plan on going forward, and for 2025. So I think that remains. But the political paralysis is still there. I mean, the hatred. There is not. There's no middle ground to the side that can't stand Trump. There's nothing. You can't say or do anything. They lie outright. They just make up stuff. And there has been a handful of people that have, I don't know if you want to call it, gave an olive branch, but maybe they won't be as bad. But I think, that, as you know, and this is hard for a lot of people, I wrote about it this weekend again. I think this comes from an evil that is spiritually led, and these people have embraced it and their souls have been taken over by it. So I suspect after this honeymoon period, and by the way, between Thanksgiving and New Year's, no matter who is president or who's about to be president, Wall Street at least, and people in general in investing, go into what I call the no bah humbug period. Meaning I don't want to hear anything negative. I don't want to hear anything bad. I want to, for 1 month at least of the year, say hello to my fellow Americans, not argue with everybody. I'll worry about that in the new year. So you usually don't get a lot of big concerns expressed during that period. And I think that'll last through his inauguration. But soon after that, he will have to hit the ground running, Elijah, because he doesn't have 4 years. He only really has 2. And the reason I say that is we have congressional elections again 2 years from now. They almost always flip a little from what they did beforehand. And we have a lot of Senate seats that are going to be up, and more Republican-held Senate seats will be up. And those guys, if he doesn't hit the ground running and he starts to have issues, they may not stand behind him as much because they'll worry about their own reelection. But I certainly think there's a period of time now that we can say at least one of those top 5 has been put in check. I really think he is going to go full blast with the immigration. Hey, look, even up to the north of the border where it's just horrific what's happened there, Canada's suffering much more from their immigration invasion. Even their so-called leader right now has said that he's going to put a freeze on immigration. Too little, too late. But I think it's going to turn. It's turning in Europe. People realizing you just can't have this overwhelming number of people coming in. And then the cost to those that are already here is just astronomical.
Peter Grandich has built a career as one of the most respected voices in financial markets, known for his keen ability to spot emerging trends long before they hit the mainstream. For decades, he has helped investors navigate the complexities of volatile markets, providing insights that often prove to be uncannily accurate. Now he's issuing one of his boldest calls yet, a massive surge in silver prices that he believes could reshape the investment landscape. But why should we take this prediction seriously? What does Peter Grandich see that so many others have missed? For one, he has an unparalleled understanding of the precious metals market and its intersection with broader economic forces like inflation, geopolitical instability, and technological innovation. His track record speaks volumes, as countless investors have benefited from his foresight over the years. In this video, we're going to explore not only Grandich's background and expertise, but also the compelling reasons behind his silver price prediction. Why is silver, often seen as gold's less glamorous cousin, suddenly taking center stage? And more importantly, what should investors be doing to prepare for the potential explosion in its value? By the time we're done, you'll understand why silver could be the single most exciting asset in today's financial markets, and why Peter Grandich's insights could mean the difference between seizing this opportunity or watching it pass you by. Let's take a closer look at what sets silver apart and why it might just be the smartest move you can make in your portfolio right now.
The way I like to describe it to people, nothing in the long-term past the year outlook that I've had has changed. If she had won, my feeling was she would greatly accelerate us to that. Trump will at least slow it down or maybe even get it to grudgingly maybe stop where it is. I don't think he's going to be able to reverse a lot of the stuff that has transpired, as much as that's what the some people, I call it, view it as the second coming. I looked in the Bible, I didn't see Trump's picture, but according to some, we are going through the second coming. But needless to say, it was very important for us, especially people of faith, because I think he'll do everything that this past administration didn't do for not only freedom of speech, but freedom to practice religion, and not just one certain religion from the Middle East, but a religion that was founded in this country several hundred years ago, and still most people, the majority of people, still want to practice.
Silver has always been a reliable player in the world of precious metals. But what if I told you it's on the verge of a historic transformation? To understand the potential ahead, we need to look at silver's past and the incredible role it has played in the economy. Over the years, silver has quietly supported the rise of industries, from electronics and medical applications to renewable energy solutions like solar power. Yet, despite its vital contributions, silver has often been overshadowed by gold in both price and attention. But the winds of change are blowing. The silver market is evolving rapidly, fueled by a unique combination of industrial demand and economic uncertainty. Historically, silver has acted as a store of value, much like gold, but it's also a key material in cutting-edge industries. With the global push toward clean energy and advancements in technology, silver is no longer just a safe haven asset, it's an essential resource for innovation. Looking back at recent years, silver has shown remarkable resilience. It has withstood the shocks of the pandemic, the inflationary pressures that followed, and even the roller coaster of global markets. Now experts like Peter Grandich are predicting that silver is poised for a breakout unlike anything we've seen in decades. As we examine silver's unique position in the market and why it could outperform other assets, you'll see how the stage has been set for an extraordinary rally. Let's dig into the history and the fundamentals that make silver not just a commodity, but a potential game changer in today's investment landscape.
He's the least of the warmongers that I've seen as president since I've been an adult. There's no question that even the overtures out of Putin was that, he's prepared to talk to Trump, and he's prepared. And of course, the other side, because he's in his pocket and all that. No, the man has not wanted to go and be the world's policeman. Even when his famous meeting with the NATO leader, when he said to him, we're paying 4 or 5 times more to protect you, and at the same time, you want us to pay to protect you from Russia, and you're buying all their gas. How does that make any sense at all? So I think we have a much better chance with Trump in the White House not to have World War III than we do with a man who just continues now. When you watch him, I don't even know if he has the capabilities to understand what his generals and all could be saying to him right now. And the other person is just what we all saw what she lacks. So it's really concerning between now and January 20th.
Silver isn't just a precious metal. It's a cornerstone of modern technology and industry. Its unique properties, like the highest electrical and thermal conductivity of any element, make it irreplaceable in critical applications. From the smartphones in your pocket to the solar panels, powering a sustainable future, silver is everywhere, and its demand is skyrocketing. Let's talk about solar panels. Did you know that a single residential solar panel contains up to 20 grams of silver As the world shifts toward renewable energy, the need for silver and solar technology is soaring. In fact, silver demand in photovoltaics, the process that converts sunlight into electricity, grew by 13% in 2021 alone. And that's just the beginning. Experts predict this demand will continue climbing as global governments push for net zero emissions. Then there's the automotive industry. The rise of electric vehicles is fueling another surge in silver demand. Battery electric vehicles can require up to 50 grams of silver per unit, far more than traditional combustion engines. With electric vehicle production accelerating worldwide, silver's industrial importance is becoming impossible to ignore. But silver's value isn't just in its industrial uses. Its antimicrobial properties are revolutionizing medical and water purification technologies, from sterilizing surgical instruments to purifying drinking water in space. Even in the era of advanced materials, silver remains irreplaceable. What does this mean for silver prices? Industrial demand is only one piece of the puzzle, but it's a critical one. As we move deeper into this technological revolution, silver's role as an indispensable resource will only grow stronger, setting the stage for what could be the most significant price rally in decades. And we're just getting started.
Yeah, so right at the height of the BRIC meeting, I decided that, I've been long gold since 1300, that we were going to have a sharp but fairly swift and not long-lasting correction. And I used it to take some profits. Thankfully, last Friday, I expressed that I thought the bulk of the correction was over and that, we can go back up. But what I do want to point out to people, we went up 40% in gold in a year from the beginning of the year to the height. This is not Bitcoin. Bitcoin is just a high-flying speculation. They can call it whatever they want. They claim it's going to be a reserve currency and all. Gold is a monetary force. It doesn't normally, nor is it really good for it to go up 40, 50% every year like that. So it was quite healthy. And for anyone like me who still believes we're going to be north of 3,000 before it's all said and done, and could be possibly a lot more than that, we needed this correction. It was basically a semi-parabolic move up. And quite frankly, the two things that were leading it up, the BRICS, happened. So, this buy the rumor, sell the news. And also the central bank buy-in eased a little, not to where it's changed, of course. And then, of course, the Trump win initially, people view it was even more negative because the dollar rallied. He's going to be a Bitcoiner. He's not going to be a gold supporter. But gold, again, as you and I speak today, up nicely. I think it's up also because can I just stop and tell you the complacency in my 40 plus years, both by professionals as well as individual investors, is off the charts compared to the fundamentals out there. When today, we're probably the closest to a nuclear crisis since the Cuban Missile Crisis in the early 60s with Kennedy. And you would never know that if you were listening or the talking heads on Wall Street or the average investors. But this is a real big concern. And look, you don't want to root for it, your gold, because it's going to wipe out even if you own gold. But it's really alarming that people have pushed something like that aside at a time when really those type of things should be even less handled by this current administration, because you're a lame duck, and basically put any of those decisions. Listen, if we haven't allowed Ukraine to shoot these missiles by now, and it's November 19th, what's 2 more months? Let the new presidency come in and let them handle it, so to speak. And some are arguing, I think it's a good argument, that this is a way of creating more problems for Trump than trying to help things get better.
While silver's industrial uses are undeniably impressive, its economic role as a safe haven asset has stood the test of time. In times of uncertainty, investors flock to precious metals, and silver is no exception. But there's a unique twist. Silver not only mirrors gold's behavior as a store of value, but also reacts with greater intensity to market fluctuations. Historically, when gold rises 1%, silver tends to climb by an average of 3%. This volatility can be daunting, but for savvy investors, it represents an unparalleled opportunity. Let's take a closer look at the macroeconomic drivers pushing silver into the spotlight. Inflation remains a looming concern, even as central banks worldwide wrestle to bring it under control. When inflation outpaces interest rates, real returns on traditional investments shrink, and silver shines as a reliable hedge against the erosion of purchasing power. For example, during the high inflation period of the 1970s, silver saw a remarkable surge in value, offering investors a crucial lifeline. On the supply side, silver faces significant constraints. Unlike fiat currencies, which can be printed endlessly, silver's supply is finite and increasingly strained. Most silver is mined as a byproduct of other metals like copper and zinc, which means production isn't easily ramped up. At the same time, ore grades are declining and mining costs are rising, creating a perfect storm for a supply-demand imbalance. With demand outpacing supply and inflation pressures driving up costs, it's no wonder silver is gaining traction among institutional and retail investors alike. As Peter Grandich highlights, the alignment of these economic forces could lead to a silver price explosion. But this is only part of the story. What's next could solidify silver's status as the standout investment in today's uncertain market.
They will, but where it's more pressure is in the average day American. First of all, we just learned today that 40% of car loans in existence are underwater, which simply means that people owe more on the car than the car is worth. So those aren't going to be any new car purchases anytime soon. That's the reason, because someone went out as far as 8 years in car loans. The second is we've seen it tremendously hurting continuously in the real estate market and in homes. Mortgages have popped back up. It's becoming increasingly, if not all-time difficult for new buyers to buy. And we're also seeing that, and let's not forget, we still have all these banks who have bought all those papers, the credit paper and bonds and stuff at the lows of interest rates, and they still have all these unrealized losses on their books. And then, of course, it impacts the working class person. Elijah, the bottom 50% of wage earners, or 1 out of 2 of Americans, half of them, or 25% of all workers, are using credit cards to just pay necessities. Gas, rent, food. That credit card is the biggest monkey in the back. It's worse than borrowing money from the mob, because once you start making just those minimum payments, you never get out. And these are all serious issues, and they'll come to bear sooner than most people think. Maybe not in the next few weeks, because it's not something people will focus on. But there's a lot of structurally things wrong that have been done for decades and from both sides of the aisle. And as much as I think Trump and some people who are behind him have pretty well average good intentions to try to fix these things, some of these things are beyond fixing. And I think the realization that may not come to the latter part of next year, when they see that a lot of those things don't get done. And it's sad to say, but it's your business. That actually still bodes well for the metals. That's why I don't have any real concerns about anything structurally wrong with the gold market. I know the bricks are going to move more forward. I know that central banks recognize the change is coming, and that's why they've accumulated all this gold. And so the gold market is a much safer place for fears of loss of large principal. It may not make as much as some people predicted at all, but I don't think it has a 40 or 50% downside. I do think if some things go wrong, the stock market could have that. And I think that's the other supporting mechanism now for gold. And against bonds, people are feeling gold is a place for safety of principle, something that you've spoken about, and I'm sure your dad was speaking about when you were a little boy. And it's true, and it's finally come to bear. The things that were spoken about for 10 or 20 years that people kept hearing, maybe to the point they were nauseous. But now those things are playing out right in front of our eyes.
In a world riddled with geopolitical uncertainty, silver has emerged as a dual-purpose asset, a precious metal for wealth preservation and an industrial metal for technological advancements. But its appeal doesn't stop there. Geopolitical tensions, trade disputes, and market instability have always driven investors towards safe haven assets. Silver, with its intrinsic value and industrial importance, has become a standout choice in uncertain times. Let's explore how the global stage is tilting the scales in silver's favor. Consider the ongoing volatility in Eastern Europe and the Middle East. These regions are hotspots for geopolitical risk, often triggering a flight to safety in financial markets. Gold typically takes the lead in such scenarios, but silver, with its stronger price movements, has increasingly caught the attention of those seeking refuge from instability. Then there's the global economy itself. Nations are grappling with growing debt levels and inflationary pressures. Central banks, traditionally buyers of gold, are indirectly bolstering silver's position as they pivot towards hedging strategies that include other precious metals. Emerging markets, where economic and political volatility is often heightened, are also fueling demand for silver as a means of diversification and financial security. The recent rise of BRICS nations, Brazil, Russia, India, China, and South Africa, further complicates the picture. These economies are challenging traditional financial systems and diversifying their reserves away from the U.S. dollar. This shift strengthens the case for precious metals, silver included, as alternatives to fiat currency reserves. As Peter Grandich has pointed out, these geopolitical and economic forces create a unique environment where silver isn't just a hedge, it's a potential game changer. With markets on edge and investors searching for stability, silver's role in portfolios is taking on a new urgency. But we're still building the case for why this metal could be the standout asset of our time.
And today, a good part of it, we're also seeing a lot of internals, I think, breaking down as well. I think the market has been up, and like I said, it gets a benefit from Thanksgiving to New Year's, that people kind of look at the cup half full no matter what until the new year, and then of course they go back to being themselves. There's two things I think that have kept it going. One is all the excitement in the Bitcoin. Now everybody's excited. Bitcoin's 92,000. Had peaked at 70 something. It's not a huge move given where it was just a couple of years ago, but everybody and his mother says it's the next best thing. There's hard to find anything negative about it. I keep saying it won't peak until they announce it cures cancer. Then, of course, we'll know that we've reached the ultimate peak. But I think the thing to be concerned about, whether you're bull or a bear, is what happens with interest rates here, especially coming into another period where the Fed is expected to cut interest rates again. 10-year Treasury bond has actually increased almost by a full point from before the first cut in interest rates. And it's up in an area which I keep targeting, and we got right up to it again, the 450 yield area. And if we get much above that, I do think it's going to cause a huge problem no matter what period of time of the year is for the stock market. For one, for those that still treat stocks as stocks and bonds and not one big casino, there is some valuation models now that suggest for the first time in a couple of decades, bonds are actually getting more attractive than stocks, comparing one to the other. I also think that we're going to continue to see Trump, no matter what other things he may do well, be as big as a spender, if not more, and increase the debt up tremendously. And I think that's concerning, that the Stanley Druckenmillers, the Paul Tudor Jones, and some of the smartest people who I'd give my money to tomorrow if they would manage for me. And that is, they are going negative on the bond market. They're becoming a word that I haven't heard since I first entered the business in the early 80s, bond vigilantes. And there's a great concern about the talk that's been around for decades in the gold market, but it's finally come to the bond market. And that is the ability for this country to pay off its interest. We're heading to 50 trillion. The Congressional Budget Office says we're going there in less than 10 years. A 5% interest rate, 2.5 trillion in interest expense. Best year we ever had was 2022 in revenue. It's a little about right on the 5 trillion mark. we can't sustain the government as we know it, no matter how many cuts and excess waste that they get rid of, which I think is going to be a challenge for them, by the way. But nevertheless, we won't be able to pay half of our income to interest and still have a government that we've grown accustomed to and all. So I think the stock market pretty well was in a mini melt up right up through the election and for a few days, but it's given most of it back. And like I said, if it wasn't for the seasonality of having positive, I'd even look to short it. But I just know that I too will not be bah humbug until after the 1st of January.
Silver has often played second fiddle to gold, but a closer look reveals why it might be the better bet for investors right now. While gold is seen as the ultimate safe haven, silver's dual nature as both a precious and industrial metal gives it unique advantages in today's market. The question isn't whether silver is valuable, but rather its potential to outperform gold makes it a smarter choice. Let's start with price dynamics. Historically, silver prices are more volatile than gold. For every 1% movement in gold, silver typically moves 3%. This greater volatility might seem risky, but for investors willing to navigate the fluctuations, it also means significantly higher potential returns. With gold currently trading at nearly 88 times the price of silver, the historical gold-to-silver ratio suggests silver is deeply undervalued. Over the past 30 years, the ratio has averaged closer to 67. If the market reverts to this mean, silver prices could see substantial gains. Then there's the accessibility factor. Silver's lower price point makes it an attractive option for retail investors looking to enter the precious metals market. Unlike gold, which often feels out of reach, silver allows for more flexible investment strategies, whether through bullion, coins, or exchange-traded funds. Additionally, silver's industrial demand creates a layer of price stability that gold doesn't offer. As renewable energy and electric vehicle production continue to grow, silver's use in these sectors provides a consistent and expanding market base. This means that while gold depends heavily on investor sentiment, silver benefits from both market optimism and technological advancements. Peter Grandich emphasizes that this unique mix of factors positions silver not just as an alternative to gold, but as a potential outperformer. For investors looking to diversify their portfolios and capitalize on precious metals, silver offers a compelling case, one that might be too good to ignore.
Yes, I actually wrote about it this weekend to my clients. I wrote what I said was the best advice I will ever give. And I try to basically paint it out, and it's available. People want to see it. It's enough. It's on my blog. It's on my X page. And I really just spoke about it. Again, most people don't want to hear this, even if they understand what I'm talking about. And that is that this battle that we're having is not a human against human. It's an evil spirit that is far more powerful than anything that a human nature can muster. And once certain people embrace that negative evil spirit, it's very challenging to overcome it. And that's why I think, as good-hearted as some people are with these attentions that you just spoke about, they're up against really the biggest negative force that's known in the universe. Fortunately for us and those who accept Christ as their Lord and Savior and recognize the victory had been won already at the cross, but the battle still continues because the sum total of the battle is not known, who ends up where. And that's also what I pointed out in our writing and all. And I think that's what I am going to count on more than, I mean, it's great if Trump, and like you said, gets these things done. But even if he doesn't, or something, God forbid, happens and things get worse and not better, my focus will be on what I'm taught in the good book, a book that for a couple thousand years has outlasted every other book. It's a manual for life for me. And I encourage people, even if they just look at it as an historical book, look at some of the things it's been outright. It's big. It talks more about matters of money than it does even about what you think would be the two end issues, heaven or hell. And what's real interesting about that, there isn't a positive verse about debt. In fact, Bible's full of warnings about the troubles of debt and what you will get into if you become a debtor. We're also taught, also if we're the creditor, that we're supposed to help some of those that are in the debt. And also, to answer your question, and I know you and I walk in that same group, it's tough for a lot of people to hear this, especially when it's tied to the financial world. You know, if I may tell you, I don't know if I've ever had a chance to tell you, when I decided to open up Trinity, which was the sports management company for Christian athletes, and I went to the broker dealer I was working for in 2000, the guy told me, you can put a rock on the door, you can put a bull or a bear, but you're not putting God's picture on the door. You don't mix religion and politics, religion and finance. And basically, if you look around the financial service industry, that's true. What you and I speak about, you will not find on many other mediums at all. But thankfully, you give me the opportunity to do that, and you're open to it and all. And, you know, there's a certain percentage of people that appreciate that. But there's also certain people that don't want to hear it or actually think worse, that we're only saying it, the profit from it. But that's there. That you and I have a calling. Believe it or not, as much as you are here to talk about gold, we're probably doing more speaking about this for any one person than any one person might have benefited from our gold or stock advice. And that's the beauty and the gift that you and I have been blessed with.
Peter Grandich's forecast for silver is not just another market prediction. It's a carefully crafted analysis based on a convergence of powerful trends. He sees silver poised for a historic price explosion, driven by factors that extend far beyond its traditional role as a precious metal. But what exactly are these key drivers that Grandich believes could send silver prices skyrocketing? First, he highlights the technological revolution reshaping global industries. From solar panels to electric vehicles, silver's unparalleled conductivity and durability make it an indispensable component in the green energy transition. As governments worldwide ramp up their commitments to net zero emissions, the demand for silver in these technologies is set to soar. Next, Grandich points to the economic pressures pushing investors towards safe haven assets. With inflation continuing to erode purchasing power and global debt levels climbing to unprecedented heights, silver's affordability and historical reliability as a store of value are drawing both institutional and retail interest. For those who view gold as the ultimate hedge, silver offers a more volatile yet equally compelling alternative. But it's not just demand driving his optimism. It's the supply dynamics as well. The silver market is facing significant constraints, from declining ore grades to rising extraction costs. This supply squeeze, combined with surging demand, creates the perfect conditions for a sharp upward movement in silver prices. Grandich also addresses the broader macroeconomic environment, emphasizing how geopolitical tensions and financial market fragilities are setting the stage for silver's shine. Whether it's the uncertainty surrounding global trade or the shifting power dynamics among major economies, silver is emerging as both a financial safe haven and a critical industrial resource. His prediction isn't just about silver's potential to rise. It's about why now is the time to pay attention. With these forces aligning, Grandich believes that the window of opportunity for silver investors is wide open, but it won't last forever. The question isn't if silver prices will explode, but how soon it will happen. After exploring Peter Grandich's insights and the powerful forces driving the silver market, it becomes clear why so many experts believe a historic price explosion is imminent. Silver's unique position as both a precious and industrial metal has placed it at the center of a perfect storm. Industrial demand is skyrocketing, fueled by the clean energy revolution and the rapid growth of technologies like solar power and electric vehicles. Meanwhile, economic instability, inflation, and geopolitical tensions are pushing more investors towards safe haven assets like silver. On the supply side, the challenges of mining silver are compounding the issue, with production unable to keep pace with rising demand. Add to this the undervaluation of silver compared to gold, and you have a scenario where the potential for a dramatic price surge is undeniable. Peter Grandich's prediction is not just speculation, it's a call to action. The alignment of these economic, industrial, and geopolitical factors is creating an unprecedented opportunity for investors. But timing is everything. As these forces continue to converge, the window to capitalize on silver's potential may be narrowing. For anyone considering how to protect and grow their wealth in these uncertain times, silver offers a compelling case. It's not just about the potential for profit, it's about positioning yourself for what could be the most significant financial shift of the decade. Don't let this opportunity pass you by. And remember, while this analysis is grounded in market insights, it's always essential to do your own research. This is not financial advice, but a roadmap for understanding the potential of one of today's most exciting investment opportunities. If you found this video valuable, don't forget to subscribe for more in-depth analysis and predictions from the experts.